There you go. The E-mini.
Welcome to our fall webinar series for Online Trading Academy. Hope you're all having a fantastic day out there. We've got a very special show for you today. We're going to talk about war stories from the floor. Thought it might be very important for all of you to know what's going on around the world, and we'll talk about trading floors. But before we do, I want to make sure we understand that this is for entertainment purposes. We're going to go through a lot of stories from the 60s, the 70s, the 80s, and maybe even a little scrape upon the 90s as we go through some of these war stories. So it's an education, fun-filled, and hopefully informative piece, because what I've learned in my 20 plus years of doing this is we can always learn from the past. And as we learn from the past, we don't replicate those same mistakes that people have made long before us. And you might think, well, trading floor is out in Chicago. What does it have to do with my trading right now? Believe it or not, it has a ton to do with it. So joining me today, we've got three, we'll just call them amazing guys. Two, I guess I'm lumping myself in the amazingness category. We've got Bill Henner and Mr. Bob Dunn, who spent many years on those floors out in Chicago. Gentlemen, welcome to the webinar today.
Great to be here, Merlin.
Thanks for having me.
I can't wait to get started here, because one of my favorite things when I was starting was talking to floor traders, because I idolized it. I saw Trading Places and Wall Street, and you kind of admire what went on there, and it certainly was crazy stuff. So how about you walk us through maybe a little bit of brief introduction of how you even got to begin to start trading on those floors. I'll let whoever wants to start go ahead.
Well, I could start off. I was kind of fortunate. My dad was actually in the business. He was a retail broker, and back in those days when I was growing up, if somebody asked him what he did for a living, he didn't use the term futures broker. Back in those days, they were called commodities brokers. And simply because all the markets that were traded in Chicago prior to the early to mid 1970s were all about physical commodities. Grains were traded at the Board of Trade, and at the CME, we traded cattle, hogs, and what was the flagship product, the frozen pork belly contract.
I even have a picture here. I'll share this with the viewers. Bill sent this one over, guys. It's funny because if you can't really read it very well, but I'll read it. It says, the world's most actively traded commodity. What is it? It isn't an oat. It isn't corn. It doesn't look like a soybean. Surprise, it's frozen pork bellies, which I guess is just a testament to life today, because we are no longer trading that product. And it's just a kind of an evolution of markets over time. Was this something that you guys traded in the past? Were you ever pork belly traders?
I've dabbled in it. I wasn't a pork belly trader per se, but I've traded it. Yes.
I traded it quite a bit because I was getting some pretty good advice on a regular basis, since my dad was a real pork belly guru and he was connected with all the other people. It's really interesting. As you mentioned, Merlin, they don't even trade pork bellies anymore. In 2011, the contract was delisted by the CME because there was a lack of interest. But back in the 60s, the 70s, well into the 80s and so on, it was for a while the most popular and actively traded market at the CME. And, the real reason, people always ask me, why no longer are pork bellies traded? And it's simply because the industry has evolved so much. I mean, markets evolved, but the primary underlying industry changed. And basically what happened was, instead of pigs being raised on small family farms all around the country, which meant you could never really get an accurate expectation of what the supply would be, now 85% of all the pork produced in the United States is produced by one of three corporations. And as you would say, they know exactly how many little piggies and pork bellies are coming to market every year. So with no mystery, there's no volatility in price movement, and they lost the speculators with no volatility. So that's why.
Well, I tell you, I got to beg to differ that there's no volatility, because I go to local grocery store and I see what's going on with my price of bacon, and my BLTs keep getting more and more expensive. So hey, I like to hedge that bet.
Well, it's just, I guess, at the wholesale level, which is really what the contract was. It's just, as I said, it's run by the big guys, and they know. And even if there were a contract, trying to compete with those guys would be virtually impossible. They're all insiders.
Yeah, right. I'm going to show a couple pictures here, Jason, if you wouldn't mind, share the screen here. One of the things that fascinated me about the floors out in Chicago, and we could go to any of those exchanges, it looked like this. I mean, I've got a picture of just a mobbed floor. I mean, this looks like Black Friday at Walmart right here, where people, I see fists and hands in the air. We can go over all the hand signals later, but I mean, these are just some historical pictures. This is probably the most organized picture I've seen so far of those floors. We'll talk about Bob Dunn's pictures later on, but how did you how did you identify the big fish? And the reason I say big fish for everybody who might be joining us who's not part of Online Trading Academy, one of the goals is to identify market movers, the participant that's going to change the direction of price. Because I don't have a ton of money, but a Goldman might have hundreds of millions of dollars riding on a trade, and they can influence it. So in that environment where you're literally shoulder to shoulder, fisticuffs to get around that trading floor, sometimes you probably can't even move. How did you identify the big fish or the big players to help you in your trading?
Well, for me, I didn't know who they were. You learn after a while. You hear someone saying a big order comes into the Canadian dollar. I was pretty much a Canadian dollar trader. I traded currencies, and a big order would come in, and I was a nobody. I knew nothing about trading really, and someone would say, "Oh, that must be Dennis's order," because it's 200 contracts that came in, and rarely is 200 contracts coming in and out of the market, unless it's an arbitrage, a bank doing some business. Rarely you're going to see a local customer coming in, with an order like that. So someone will make a comment, "Oh, that's got to be Dennis's order." Well, I've heard that 3 or 4 times to the point where I finally go, "Dennis, who's this Dennis guy that you guys are talking about?" It's always, "That must be Dennis's order." Mm-hmm. And, "Oh, Richard Dennis." "Yeah, well, who's he?" "Big trader." So at the time, there were no books written about him, but he was just a big trader, and he was one that would, trade large size and move markets and catch the markets right. So, I've heard this, "That must be Dennis's order." And then you see the brokers that are bringing in those orders. And it's usually one of 2 brokers, either Jack Callahan or his brother, Jerry. And when Jack's coming in and he's doing 20 contracts, 10 contracts, those are his. When he's coming in and he's doing 100 contracts, they're Richard Dennis's. And you want to get tipped off to those things. It's not illegal. You see him coming in and he's buying 200 contracts, he's buying for Richard Dennis. Mm-hmm. And you have a feeling that, Richard Dennis is right a good percentage of the time. He's a terrific trader. And so you want to be on that side. So you see Richard Dennis is buying a couple. You might, a couple hundred. You might put on a couple for yourself. So you see, they're brokers, or who they are physically because you see them coming in. So you try to coattail and do what they're doing. The thing is, you don't know if they're getting out or if they're getting in.
Right. And that's a luxury you had because you're literally standing, within proximity, and you could see, you go, "Okay, I know that guy works for so-and-so." And for those that don't know, you can go back through the history books and you could say probably the modern day Jesse Livermores or Richard Dennis and Bill Eckhart. These two are of the icons that come out of Chicago, kind of the backbone of what's known as the Turtle Trading Group. You can read books about those guys, and it's just their particular strategy on investing and trading. When you see them come in, you have a significant edge. And me as a retail trader, I could never see that because I don't have access to the floor in these crazy pictures here. Were there moments where, because if I'm Richard Dennis and I know I'm going, "Oh, there's Bob Dunn over there. I know people are watching me." Did you ever get the sense that they're decoying you, like they're trying to bait you in? Because I would, if I was the big guy, knowing I need to shut you up every now and again because you're riding my coattails too much.
If I was a nuisance to him and he didn't like me, yeah, I would be worried. But when they don't know you or you're a nice guy, I happen to be nice to those guys. Yeah. You want to be nice to those guys, but if you're a jerk, they could burn you. They could run through you. And Billy has seen some of those stories because he's been down on the trading floor a lot longer than I have. And
not much. I started a couple of years before, but I did work briefly on the floor during high school. I just wanted to make one mention of something, Merlin. The photo you showed of the trading floor, that was the S&P 500 pit. And that's the one, okay? That was literally the largest or second largest pit on the trading floor. So in there, it was kind of a little bit difficult to identify who was doing the buying and selling. But Bob traded in Canadian dollar for most of his time there, I believe. I traded in the Swiss franc pit. And I say that because the currency pits were just smaller. They're only like about 30 or 40 guys in the pit, meaning that you could really pay attention. And, trading on the floor was done through the process. We referred to it as open outcry. which meant every trade had to be done visibly, audibly, called out when the trade was made so the exchange could record it. So as chaotic as that picture looks right there, those hands in the air is not just a bunch of guys pushing and shoving. Those hands in the air indicate very precisely whether they're buying or selling, the quantities and the prices that they're doing. You just have to know how to interpret the signals.
Mm-hmm. Organized chaos is, I guess,
I was just going to say those exact words, Merlin. I was going to say it's called organized chaos.
It's clairvoyance, buddy. I'm connecting with you, Bob. I've hung around you long enough. All right. So, part of what we do obviously is try to identify the major market makers and the people who are going to be turning prices. The advantage that Bill and Bob had was knowing who those big guys were. And certainly if you were there every day, you kind of see how they start to work their orders. The advantage, I say, when we go from floor-based to screen-based is you can start to see those types of transactions show up on the price charts, which for those of you who practice supply and demand, that's obviously what we're looking for. Talk to me about losing your cool. I know, we want to keep this PG-13 today, but I think everybody who's going to be on this webinar today and watch the archives of it later on at some point in their trading has simply lost it. I used to call it playing Scrabble, where I would just take a keyboard and just smash it against my desk on the trading floor, keys flying everywhere. That's when I would lose my cool. But walk me through a story or two of some entertainment one of you guys seeing people lose their cool on the trading floors.
I'll let you go again, Billy. And start this one off.
Be careful, huh?
I got to know the tone of the conversation.
Clearly, there was, we were under a lot of pressure very often. There were large quantities being transacted, potentially resulting in enormous loss if you're on the wrong side. So, you really got to see what people were made of under the most stressful of conditions. But I saw many times when people would kind of lose their cool. There were a couple times where I saw somebody actually removed from the pit by the security of the exchange. Usually that was occurring not just because they lost their cool, it was because they lost everything they had in their account. And the clearing firm, having figured it out that this guy was no longer trading with his own money, wanted him out of there as soon as possible. I mean, but in terms of guys losing it, it would happen quite often. In fact, I remember very well, because we're looking at the S&P pit right now. There was a woman in that pit. Her name was Linda. Again, I better not use her last name. I want to
Linda
sure
L.
that, there's no problems here. But she, again, if you look at that picture, I challenge you to find any women in there. If you're really good at it and you're used to playing Where's Waldo, you may be able to find one or two, but there were very few. And the point I wanted to make was the women down there were incredibly tough, the ones that were able to survive in what was literally a boys' club. Now, the gal Linda, she was a trader for her own account, and she was attempting to buy an order that was a sell order that was being offered by the broker. The broker didn't see her, but the guy standing right next to her, her competitor, got the broker's attention and took the trade for himself. Now, Linda was quite certain that that trade was rightfully hers. And instead of even arguing about it, she just hauled off and cold cocked the guy. He went down on the floor like the proverbial ton of bricks. And of course, on the trading floor, what we'd call incidental contact was quite normal. We would expect that, but you couldn't actually punch somebody. So they actually had a disciplinary committee hearing for her. And I'm told that at the committee hearing, the fellow she'd punched said to the guys on the committee, "She hit me so hard, I didn't know if I was long or short." But I think it's safe to say he didn't steal one of Linda's trades again.
Not again. Yeah. You fool me once. Shame on me. Fool me twice. Shame on you.
But again, it just shows, women had to be that tough to survive down there. They had to really be able to hold their ground, so to speak.
She had a sister that was just as tough.
Yeah.
Patty.
Yeah, again, it was very often families were in there. There were, families of traders. There were quite a few of those little groups. And in fact, there are some that actually developed like family feud situations. There was a couple of families that we often referred to as the Hatfields and the McCoys.
Yeah.
They were, always at each other's throats.
My best friend, Greg.
Yeah. He was one of the Hatfields, right?
Yep.
And for the viewers out there, if you have questions, feel free to send those on in. We'll try to get to them as we progress through today. I'm going to try to cover kind of broad topics, and then we can kind of go into the fun stuff as you want. So feel free to send in questions or comments along the way. When I look at this types of floor and hear what you guys kind of said it initially, where you can spot these big guys, and I mean, we know statistically, historically, that Richard Dennis and this guy was making a tremendous amount of money on the floor. How could you lose? I mean, why did people lose on that floor if you had such a tremendous advantage? I mean, you were literally staring at the goose that laid the golden egg on a regular basis on this floor. So how was it that you guys saw people lose, or what caused them to lose in that type of environment?
It's called temporary insanity. And it does happen. And you'd be surprised. You know what it's like to be wrong on a trade and then say to yourself, well, all I have to do is just buy a few more. It lowers my price. And the market only has to rally 50% now in order for
we call that dollar cost averaging, right?
Dollar cost averaging, exactly. I mean, that's one of the big things. So it's easy to go crazy in all different ways. Dollar cost averaging, just doing stupid stuff. So, you know, this business can make you go temporarily insane. Try losing money. See, it's different when you're on a computer and you hear order rejected. This order requires $250,000 and you only got 10,000 in your account. You're going to hear that on the computer. There's no way you could really go insane other than losing all the money that you got in that account. But on the trading floor, when we were trading with trading cards where everything was being written, and I don't know who Bill Henner is, and he's on the opposite side of my trade, and maybe I'm not good for the trade, or he's not good. He doesn't know if I have money in my account. He doesn't know if that trade's going to clear. I mean, he knows the trade will clear because our clearinghouses guarantee that, but he doesn't know me. And so I could be trading, you know, with trading cards that I don't have money in my account. And until I give the clerk that picks up my trading cards, until I give her those cards and she sends them up to the office to be key punched, my clearinghouse does not have a clue that I'm long 350 S&Ps right now. And I only have $20,000 in my account and it's going against me. So they don't have a clue of that. So it's easy to go crazy if you don't have discipline and no one's watching you over your shoulder telling you, you can't do that. You can't trade anymore. You've reached your limit. So it's hard. It's easy to do because people do that when you're losing all that money and you say, oh my God, I'm broke. I can't be. Let me just buy more. They start really going crazy. That's happened. There's war stories about that.
I think the easiest, simplest way to kind of generally explain what happened, it all boils down to somebody losing their discipline. And you didn't have to have a, you know, well, it's a major lapse if you let yourself get into that kind of situation, but it didn't take very long. I saw guys literally, you know, go from being a successful trader to being out of the business in 90 minutes under the bad conditions, where basically they were long, the market was dropping, and instead of getting out, they decided to try to buy more, hoping it was going to come back. And again, most of the times you can get away with that, but the one time it doesn't come back, it would be the end of a career. And that would happen on big up days and big down days. You could almost take it to the bank. After a particularly big trend day, either direction, up or down, there would be a list of guys posted on the wall when you came in the next morning who had what we call busted out, who had lost everything in their account and had their trading privileges revoked.
You know, both of you guys mentioned discipline as kind of being kind of the key why people lose. And my trading floor experience was different. I was not on an institution one like this. I was on a retail smaller floor, but I would agree the similar thing where people didn't have rules in place or violated whatever rules they may have had, ended up just losing everything and they disappear after a couple of days. Bob, you mentioned that there was, you know, kind of a systematic piece to it, or let me take that back. You didn't mention the systematic. On the old floors, it was honor system. Like, okay, I know I got 20 grand. I shouldn't be buying 200 S&P right now because I can't back that up. Do you feel that today it's probably better for the retail investors to have platforms that are basically, to some extent, risk managers with regards to that?
Absolutely, I do. Because I can't tell you, I'm a spreader also. And Bill's a spreader. He spreads. He understands exactly what I'm saying. Sometimes I have positions on that are way outside my money I have in my account. I always kept a low amount of money in my account because I didn't want to see a lot in there. This way I wouldn't go nuts and trade. But I also had the mentality that They don't know I'm doing 100 contracts.
Mm-hmm.
You know, it better work.
Right.
So, you know, it was so easy down there. And I happened to be fairly good and I was pretty disciplined, just as Bill was the same. That's why we lasted for 30 years down on that floor, because we didn't go crazy. We might have went crazy once or twice and learned from that mistake, but there's other people that they don't learn, and eventually you run out of money. So it's real easy. I got beat once pretty bad, and I learned my lesson from that. And but some people don't learn. It's like you go down the same block and get beat up by the same group of guys all the time, and you just don't learn to not walk down that street anymore. And some people do the same thing. They say, well, the market always comes back, you know, and they do the same stupid stuff. So it's real easy then to go crazy, because we both know some people that have done this. They get behind the 8 ball and they figure the only way to get out from that is to just, you know, either buy more or do some other trades. Let me buy 100 Swiss because the Swiss looks like it's going up. And people in the Swiss, they don't know what's in my account. They'll sell me 20. 5 guys will sell me 20 without a doubt. And they don't know I don't have the money. And unless I turn that card in, you know, I'll have George Klein looking for me if I turn the card in. I'm not turning that card in. Unless
the famous trade they used to call the Rio trade, where a guy would buy 150 S&Ps right on the close, and he'd be at the airport calling in to see where it opened the next morning. If it opened his favor, well, he'd go back to work. Otherwise, he'd get on the airplane.
And I like that you call it the Rio de Janeiro trade. I mean, I've heard that term many times. And to me, it's just the epitome of everything that we teach not to do, right? That is just the basically the put it all on, you know, red and just let it ride. The odds are totally against you. And if you're lucky, you make a ton of money. And to me, it's absolute gambling. It should not be done. You know, I think you guys would agree that the people on that floor that had longevity, that were there a long time, never did the Rio trade, right? They didn't have a Rio de Janeiro trade. They were consistently grinding it out because they followed their rules. They had a plan in place. And while they took their lumps every now and again, for the most part, they were consistent enough to, you know, make some decent money on that floor. Is that
the key word in there for the most part is they were honorable. They honored their trades. I'm making a trade with Bill Henner, and I don't have a clue who he is. And I just traded 50 contracts with him. I know that trade's going to clear in the morning.
Mm-hmm.
That's how it was.
I think the point also is worth making, you know, is the idea that, you know, again, people who broke the rules, so to speak, who developed bad habits, they would get away with it for a while, but ultimately it always caught up with them. Okay. Mm-hmm. I think that's important because, you know, I talk to my students very often, you know, some, you know, I come across people who are very reluctant to use stops. You know, but, you know, I try to remind them, you know, these types of habits, you know, you may get away with, by being lucky, you may get away with it for a little while, but ultimately it will catch up to you. And generally that's what would happen to these guys on the floor. They'd get away with bad habits for a while, but then that one big day was all it took. And, you know, I recall, you know, again, Bob mentioned he learned the lesson the hard way. I think we all did. You know, I definitely had a lapse of discipline for a short period of time one day. And it was really tough going home that day, realizing I'd lost so much money that my best case scenario was maybe 4 to 6 weeks of hard work to get back what I'd lost in 90 minutes. And, you know, again, most of us would learn that lesson from that, but there were guys who didn't.
Absolutely. I like that you said you lost your discipline for one day. I'm going to make everybody who's watching this feel better. I've lost my discipline way more than one day. Okay. Many, many times. It's funny because every time you have that breakdown in your discipline, and I'd encourage everybody to have a trading plan. You know, one of the courses I really hang my hat on is the trading plan class. You're actually like building out one that fits your profile and who you are. You know, every time I violate my trading plan, I can go and point at some point in that trading plan and see how much that has cost me with losses. And eventually you get so used to making those same mistakes that you start to eliminate them, right? You focus on it, you figure out how you can eliminate and get past that piece. A lot of people that they don't look at their trade results, they don't have a trade journal or any sort of planning. they end up just slowly having a bad time at trading and end up disappearing from the trading floor, physical or retail.
They're not traders, they're dilettantes.
Right. There's an easy way to eliminate that. Every time you walk on the floor, when you look at that list that Billy was talking about, that shows all the people that busted out, and there could be 2 or 3 in a day that busted out, especially after
sometimes 7 or 12 if it was a
there could be 12, yeah, if something went nuts. So when you see all the people that bust out, and you know how easy it is to do it, and you actually witness some guy sweating bullets as he's busting out, it resonates.
Yeah.
You better not do those things.
Right.
And if you do, you're going to be one of the statistics that busts out too. It took me so long to get on that trading floor. Billy was kind of, he got on the trading floor because his family was in it. He knew about the business. Me, I heard about the business. I had friends that were working at the mercantile exchange. I didn't have a clue what it was. And I had a roommate that was a floor manager, Steve Fabian, Linda's brother, Billy, you know her. And he was my roommate, and he's explaining to me short selling, and I'm fighting with him that how do you sell something you don't own? You're going to go to jail. So, I learned about this business the hard way. And finally, when I saw the hours, when I saw my buddy Fish playing basketball at Hollywood Park at 2:30 in the afternoon, and I'm like, you work, don't you work? And, all these guys, they were done working. I loved those hours. I got, it was intriguing. I came down to that trading floor and learned the business, not knowing a thing, but that was my way of getting on the floor. I just applied for membership and figured I'm going to do this. I'm either going to lose the money I'm coming in with, but I have to try. Right. And it was one of those things. I didn't have a clue what I was doing. And I managed to, I learned from mistakes. And because I had such a limited amount of money, I couldn't allow myself to make too many mistakes too many times. And I better learn from the mistakes that I'm making, not to make those mistakes again. And it's so hard for me to get down on that trading floor that I couldn't take a chance of losing. Why? Yeah. I couldn't go back to my wife and my mother-in-law with my tail between my legs and say I failed at this game, because they were killing me when I went down there. How could I just got married, and 6 months later I quit a job. I quit my job to go do a job that I didn't have a clue what I was doing. Talk about fights between.
Yeah, I'm sure that one went over well around the dinner table. Happy wife, happy life, right? Let me go to this question from Lori real quick. She says, how do people get a place in the trading floor to trade their own money? I always thought that the people on the floors came from big companies like Trading Places. Lori, that's a great question. And almost everybody that I've ever met that is a floor trader from Chicago was not working for a big firm. They were locals. They were just local guys that got an application, like Bob just mentioned, an application to the floor, got a seat on the exchange, you had to buy a seat on the exchange, pony up some money for that, and then you could trade on the floor. But it wasn't just big institutions. I mean, you look at a lot of the guys were just, local guys that brought in their friends like, hey, Bob, come check this out. That's what it seemed like to me in the old days.
That's what happened to me.
Most of the people were in that category, to be honest. Most of the traders on the floor were local traders. They far outnumbered the company and institutional guys. When you look at that, I was
one of those guys. And
if you look at the trading pit, that big pit picture we were looking at, only the outer ring, the absolute outer perimeter, is the brokers. They had to be, where they could be accessed by the orders coming in from the phone banks. That's all those tiers of guys with yellow jackets. But the actual brokers stood on the outside, and basically everybody except the guys on the outer ring, the very top step, were local traders. All those guys down the middle, for sure.
So that top row there that you guys, you mentioned, is that to me seems like the big fish. Like those are the guys that move in the market. So would there be times you just kind of, that one guy works for this firm? Because I used to listen to a thing called LOS Squawk Box, which was basically a guy that would sit there and read hand signals on the floor in the S&P pit. And he'd be saying, locals only, Goldman Sachs coming in, and he would talk about the big firms versus the smaller firms. If I knew who those guys were at the top, I think I'd be like glued to them and waiting to see their reactions as they pick up or hang up a phone.
The bigger fish will always be hanging around the brokers on the top, and they want the guys next to them that will take the bigger numbers. As you filter down to the middle of the pit, that's where the smaller traders are usually at. They get the scraps, the remora, that and the
But-
scraps that come
But
off.
so what Bob's saying is really, if you wanted to get the most access to market orders, particularly, which of course is a great thing if you're a local trader, you could just buy on the bid and sell the ask and not really take any market risk. The problem was if you stood up there, that second step where the big fish that Bob was talking about stood, it was the unwritten obligation was you had to be willing to take the other side of whatever order the broker would get. You couldn't just say, no, that's too big for me. Okay. So those guys they took some big swings up there.
Yeah.
You
Well, they had the money to back it. Great question from Adam here. He says, what were the spreads like then? Certainly as we've gone from this, floor trader hand signal type of open outcry market to screen based, those spreads have shrunk significantly. You got one tick spreads on S&P futures and things like that. What was it like back then? Were spreads really wide?
No.
No.
You were trading the front month and you had one tick spreads. Sometimes it would be 2-3 ticks, it's a little slower. The markets would widen up a little bit, but overall you had one tick spread, especially S&Ps, unless the S&Ps were going crazy. May 6th, the flash crash, the spread in the S&Ps at some points were 10 handles wide.
Mm-hmm.
Yeah, but that's not the trading floor. That's modern electronic trading we're talking about. On the trading floor, actually, if you look at it right now, the S&P, the E-mini that we trade, the minimum spread, it's trades in quarters of points. Back in the old days, the big S&P contract, the one that we see the picture of in the pit that we're looking at, that thing traded in spreads that were a nickel wide, 1/5 of a current tick. Instead of 25 points, a tick was 5 points. But of course, a full handle from one point to the other, instead of being 50, was $500. So a nickel was worth $25, 1/20th of a point.
But Bill, when that was happening, May 6th flash crash, that was pit traded, and it was 10.
No, there was nobody in the pit by 2010. I mean,
I didn't mean 2010. I meant the May 6th.
That's
When was
2010? Yeah, it was 10 years ago. That was the infamous flash crash.
Well,
But
when
there were like 15 guys still hanging around in the pit because wives would kill them if they stayed at home. But there's no real trading been going on in that pit for 15 years right now.
well, if you listen to Bill what's his name that had pit noise? He had the service pit noise.
I think that's what Merlin was talking about, the squawk box these guys used to offer, which, of course, these days it's ridiculous. Why would you want to listen to a squawk box? None of the volume is being transacted in the pit.
No, I wouldn't want to listen to a squawk box.
Back then it was. The late 90s, it still was.
Oh, in the late 90s, it had a place. It was like, like your own, Audible level 2 screen or something.
Yeah, it was interesting because as this guy was reading, and I had no idea what I was listening to. I'd never been on the floor out in Chicago, and I could hear him talking locals only. And you're like, okay, locals only were small fish. And then you talk about a big player come in and like, Goldman bidding the half, Goldman bidding 3/4, Goldman bidding 7/8. You're like, oh, okay, this thing's really starting to rally. It would be about 60 seconds before those transactions actually came through to our electronic platforms. And I was like, oh, this is, I'm not front running. This is just using technology and
Right.
jumping in. It was a huge advantage back then, no longer there. Guys, I want to show us some quick pictures. And by the way, everybody, feel free to send in questions. I have a high school graduation picture of Bob Dunn up here. I think you guys want to check this one out. This is Bob when he was back in high school over here. You look just the same, Bob.
I know, I do look the same. You know,
Glasses got a little more square, but you're still Dunn 245.
I got to tell you something. Those two people that I'm talking to are probably the most influential people in Chicago, both of those men. The man on the left is Mayor Daley, and the man on the right is Leo Malamed, the chairman emeritus of the exchange. If it wasn't for that man on the right I'm talking with, there wouldn't be S&P futures. There wouldn't be currency futures.
Wow.
Am I right, Billy? He saw the vision.
He was certainly instrumental in getting, actually, I think you can give him a lot of credit for the whole idea of financial futures to begin with, because the currencies were the first financial future. That was the first time anybody in Chicago was trading something that you couldn't eat.
Like, wow, how do I eat this? You had a lot of famous people. I think you had one of you and Colin Powell, right?
Well,
Right
I
there.
made it a point to kind of get in with all these guys, and because I was friendly with Leo and I was always with Leo, the Merck photographer kind of knew me, and I was kind of I like to get in all these pictures. So when I saw Colin Powell there, I like Colin Powell. I definitely wanted to get in a picture with him. So I went right up to him and looks like we're best buds. But
yeah, he was probably like, "Get away from me, buddy. What's with you and your American flag?"
It could have been, yeah.
I like the next one though. You've got you can see we've got Rick Santelli, and then lurking in the background we have Sasquatch in the background, just like it's a Bob Dunn sighting.
Yeah. Well, I would call people up. I'd have friends, I knew when Rick was doing his little bits, and I'd call a friend up. I says, "You got CNBC on?" "No." "All right, turn it on right now.
I'll
photobomb Rick for you." And I would just coming back and I would do that. I mean, Rick knows I do it.
Of course. I'm sure a lot of traders do. Well, anyway, guys, this is the 30-year treasury pit from 1989. This is one of the last pictures I'll show you. I just think this one's really interesting. I mean, you look how packed that one is. It's funny because, back in 89, this looks like an extremely popular one. The 30-year treasury pit, I'm sure, was not like this back at near the end of the late 90s, but tons of action. What was unique about this, and I want to make an interesting point here about evolution of markets and trading styles for everybody who's watching this. When you start off trading, generally you're going to come in with a particular style. And as you progress, technology, environments, markets may change that over time. If you follow Bob Dunn's Twitter feed, one of the few times I've actually had an altercation with Mr. Dunn was when he was just slamming day traders and people who use short-term charts. He was like, "Nobody does it. You can't trade off a 5-minute chart." And the irony is, answer truthfully, Bob, back in the 80s, were you a day trader?
I was a day trader, but we never looked at, I'm still a day trader. We never looked at short-term charts. We got a book that was called Commodity Perspective. It had the first 2 contract months of everything that was traded on the floors. And that's all we had. And that's all Richard Dennis had. And that's all Randy McKay had. And that's all Bill Shepard had. I mean, they had access to other stuff because they had computers in their offices. But when I was taught stuff by certain people on the floor and they were showing me stuff, it was always on a daily chart. No one ever pulled out a 15-minute chart and says, "Check out this supply zone."
Well, I think it's also important to note that in those days we didn't have computer charting available.
Yes,
so any chart other than the daily charts that you could buy each week, they were updated. You could buy a new copy, and then you had to fill it in on your own for the rest of the week. But if you wanted something smaller than a daily chart, you had to start from scratch, create it on your own, which was incredibly labor intensive. So it's just nobody did that. But once charting came along, computer programs and things like that, things really evolved.
Right, they evolved, but the fact is, for so many years, these guys that made fortunes or lost fortunes, it was all done with daily charts.
Right.
And so
that's all they had.
Right. And I think
but the fact that it was done then means it could be done the same way now. And how do you catch a big wave when you're looking at a micromanaged chart? That's just my thing. That's why I bashed them. I know people make money on short time frame charts. I get it. I know it's done.
But I think that you've changed your style. So you said you were a day trader and you said you are a day trader. I beg to differ. I think you're more of a swing trader because you said you're looking for those runners.
Well, I am. I'm looking.
Back on the floor, it's like, I got to be out by the end of the day. Now it's more like, hey, you know what? I got something that's working, following my rules, move my stops up. Might keep this 2-3 days.
But that trade starts out as a day trade, and then throughout it evolves. Oh, this looks like I should take it home tonight, and I'll take it home position.
Only
it evolved.
While again, I don't know if Jason can put that treasury pit photo back up so folks can see it. I just wanted to mention a couple things. I think sometimes, these days, a lot of people run the risk of maybe giving these guys a little more credit than they deserve in certain areas. A lot of these guys, again, back in that day, the bond pit, as you can see, was incredibly packed with people. Yeah. The story was if some guy in the middle had a heart attack, he would be held up. He wouldn't even hit the floor because they were so packed in there. But the point is that bond market in those days used to have an ATR, an average range of about 3 to 4 points a day. Of course, if you guys are bond guys, you know, each point's worth $1,000. So that's a pretty big range. And many of those traders, especially the guys that were standing near the outer circle there, they were trading hundreds of bonds at a crack. So imagine something that's moving $3,000-$4,000 per contract per day, and you've got a couple hundred on potentially at any moment. You can kind of do the math in terms of the financial swings those guys had. But I can tell you some of those guys that I was pretty sure were multimillionaires probably couldn't tell you what a 30-year bond was. They really didn't even know what they were trading. What they knew was they knew how to buy twos and sell threes. That is what they knew how to do very well. And they did it over and over again, multiple times a day. And a lot of them, I think it's safe to say that that pit we're looking at right there probably produced more success, more millionaires per se, than any other single pit in any of the exchanges in Chicago.
You know, it's interesting to me that it's all evolved from this to screen-based trading. And, you know, you look at the craziness, the hand signals, you know, it's all difficult. How have you two transitioned? Because to me, I would look forward to going to this every day. I mean, I'm hanging out with my buddies. It's loud, it's obnoxious, it's crazy. And because of that energy, your days probably felt like a 1-hour day because they would just go so quickly. How has it changed for you now, that evolution, if you will, to just screen-based trading that's quiet? No one's yelling at you. There's nothing going on. I mean, how difficult has that been for you guys?
For me, it's been a fairly easy transition, other than the fact that I miss the camaraderie and hanging around with Bill and going, taking a break and whatever, talking in the break room. I miss that. But because
you still got your wife at home to yell at you, right?
Yeah. my trading has evolved to the point where, you know, I became a technical trader, and I also did what Billy was talking about, standing in front of the broker and trying to buy at the bid and selling at the offer all day long. So I did a lot of scalping. I did spreading, but my trading evolved after watching a lot of these superstars, how they ride waves. My trading eventually evolved to a longer time frame. In other words, I'm trying to hold the trade for a day, hold it a little bit longer. So as I'm holding that trade, if it starts to turn out like it's looking better, it's going to go into a little bit longer trades, you know? So it starts out as a scalp, because I might be out of that trade in 5 minutes or less. And that scalp turns into a little day trade. Mm-hmm. Well, now if that trade is still looking good, because I'm trying to ride a wave, remember, so now I'm looking at charts. So my evolution from the pit to the electronic market, for me, it was good because I was able to evolve from that trader that stood in front of the order filler and tried to buy at the bid and sell at the offer all day long and get those little edges. I evolved into a trader that looked at the charts and had confidence in what I was looking at, knowing that this should go to the next level. And if it doesn't, I've got to get out. So I started putting more trust in the charts, and my trading on the trading floor started becoming more chart-based than just standing in the pit and screaming and yelling all day long. So now, since I was getting successful at trading off the charts on the trading floor, my transition to the electronic market was easy because I'm basically doing the same thing. I'm using market orders to get in and out of the trades, and I'm doing them based on what I see on the charts. I don't need that order filler standing in front of me. I've got an order filler now standing in front of me that loves me every second of the day. It will trade with me. There's personality conflicts on the trading floor that sometimes the order filler doesn't like you for whatever reason. He's not going to trade. He'll trade around you, and you're not going to get these trades. So, you know, my trading evolved to the point where I don't need the order fillers. I trade off of price action. And if this happens, I've got to do this. So I became a chart-based trader on the trading floor, one of those traders that I tried to emulate and admired how they just put on a trade, walk into the pit, buy 80 contracts, and then leave and come back at the end of the day, and they're getting out and they're making, you know, $40,000. And I was in such awe that I could not believe what I saw. So I tried to emulate that. How do I stay in these trades longer? How do they do it?
Right.
I
I think
learned
it's
how to
interesting
do it.
also on the trading floor. When you think about scalping in its purest sense on the floor, it was almost risk-free trading. Okay. If Goldman is two bid on 500 and JP Morgan has 800 to sell at 4, all you do is stand there and buy 2s and sell 4s. You know,
Yeah.
as long as their market orders coming in,
Right.
and that's why, it was again, there's no reason not to do that. If they want to just give you free money for standing there with your fingers two bid offered at 3 or 4, why wouldn't you do that?
Yep.
Now, of course, the problem was a lot of guys down there only learned how to do that. They only
Right.
learned how to trade successfully by working the edge, as we say, buying on the bid, selling on the ask. So these are the guys that had a lot of trouble when the trading floor disappeared, because all they had really learned to do was scalp, not to really trade as in the way that Bob just described.
They were lost. They were lost. And I was a chart trader. Billy, you were a chart trader. You looked at charts, and those are the people that are, I'm not going to say those are the only people that are successful, but those are the people that were able to make the transition. These guys that traded off of a certain feel or standing in front of the order filler and buying at the bid and selling at the offer, they were like fish out of water when the trading floor closed down. They did not know what to do. Myself and Bill, we were able to trade off of the charts. We weren't like fish out of water. It was pretty much business as usual, only we don't have the screaming and yelling going on. We press buttons.
Yeah.
So
I think a lot of it has to do with just understanding that there's going to be evolution of markets over time, and these markets may change again in the future with regards to instruments or how they trade. So it's our duty to understand those changes and understand all the markets. So
it's changed huge as far as volume. There is so much liquidity now compared to when we were on the floor trading, where getting in and out of these markets are so easy. I mean,
Right.
Even the currencies now, you got one tick markets, sometimes you'd be standing in the currencies, there'd be nothing going on, for a while. Here, there's so many more people trading all around the world that we've got so much more liquidity than we had before, and people don't use it. I try to encourage students to go into currency futures also, because that's kind of like, let's call it an untapped market for novice traders. I think when they think of currencies, they think of the Forex market, trading in pairs and, and all that. Currency futures, it's another vehicle for us to trade. If we don't see anything happening in the S&Ps or in the NASDAQ, we've got currency futures. Or as Billy was mentioning before, we've got the agricultural products, the original products that were at the exchange. There's so much opportunity out there. Just looking at charts, there's opportunities to find in about 17 good markets.
Yep.
And if you have that little skill, that little niche skill, which many people don't have, you could succeed in this business. The main thing is, as we mentioned, is risk management. Right. The guys that did not succeed on this trading floors, and the common thread of most of them that were here today and gone within 6 months to a year was really risk management, how they managed their risk and did their trading. And, they didn't have good discipline. You got to have the discipline. Absolutely. And the rest kind of happens.
Bob, let's do a speed round here. Let's try to keep these quick, because I got 2 questions and I got just a few minutes left. I want to make sure we get to these questions and do a wrap up here. Becca says, do the different color jackets mean something? As far as like earlier, there were guys in yellow jackets. Give me a quick rundown of the jacket significance. Does it mean anything?
Billy, you?
I'll take that one.
Okay.
Now, essentially, it was real simple. The traders got to wear virtually any color jacket that they wanted to. In fact, some guys had custom-made jackets with psychedelic colors and Grateful Dead posters built into it, things like that. But most of the time, the actual color of the jacket designated the firm that even if he was a local, everybody had their own clearing firm, the firm through which your trades would clear. So a lot of guys wore jackets indicating their firms. And certainly the retail, the institutional guys, they all had their own colors. Merrill Lynch was green, Payne Weber was orange, and so on. Now, the clerical staff, the support staff, they all wore, at least at the CME, they all wore those mustard yellow jackets. So typically when you see a picture of the trading floor, you'll see the pit actually is like a multicolored mess of humanity. But once you get outside the pit, it's primarily yellow. In fact, that picture right there that Jason's put up, if we can get that on there, that does a very good job. You can see lots of mixed color. And once you get outside the pit, it's almost pure yellow.
Nice. There you go. And I'm sure that there were certain ones you guys focused on. Juan Manuel Martinez says, do you think trading is easier thanks to the technology, or the technology has made trading more accessible, but still the fundamentals haven't changed?
I think it made trading a lot more accessible. I think calling it easier, it's the same, but because of the liquidity factor, I think it's easier. I mean, easier to trade and make money, that's going to be the same. It's going to be up to everyone, every individual. But as far as access and getting your trades off, I believe it's a lot easier. I think the business has evolved like that. There's everyone in the world, all you need is an account and internet access, and you're a professional trader. And not all professional traders make money, but you're a professional trader. That means we got millions of professional traders now. That adds a lot of liquidity. Before in Chicago, when it was just the trading floors, there were about 9,000 pit traders between all the exchanges there. I'm guessing somewhere around 9,000 pit traders. Now you got 9 million pit traders adding liquidity to the markets. So I think it might be easier. What do you think, Billy?
I would certainly not say there are 9 million professional traders.
No, definitely
I don't mean professional really, but
and again, anybody who opens an account, that doesn't automatically make them a professional trader.
Right.
Robinhood professional.
The beauty of it is it makes them a novice who has access to markets. And, again, the truth of the matter is futures is by definition a zero-sum game. Okay. Every money, if I'm long and I'm making money, there's somebody who's on the short side, the opposite party on that contract, who's losing precisely what I'm making. So, the whole idea is, we certainly, I think Bob would probably agree, I certainly am very grateful for the fact that there are a lot of people who get in the game who don't know what they're doing. Because they're going to lose money. If there's nobody losing money, we're not going to be able to make any money.
Exactly. Yeah, I'm loving the Robinhood traders making 200% rates of return over the past couple of months, thinking that they're now professionals and got 6 million followers.
I want to address that specifically because this Robinhood phenomenon that anybody who's paying attention to financial markets must be aware of right now. This is eerily reminiscent in my mind to the So's bandits and tech day traders of the late 1990s. Those guys who were making money in 98, 99, they were quitting their day jobs. They were talking about how they had become professional traders. And then all of a sudden, 2000 came along, and all of a sudden those guys all disappeared. They went back to selling insurance or whatever it was they did prior to their day trading days. And I suspect, again, it's a slight variation on the same theme, but those Robinhood guys are going to find out pretty soon as things start to change, that maybe they're not as good as they thought. And as I said, I mentioned earlier, I'm not sure if we did it when we were on the air, but when we were talking earlier, one of those guys in the pit, a good friend of mine, wore a button on his lapel. And that button said, "Don't confuse brains with a bull market." I think there's a lot of wisdom in that statement.
Absolutely. Gentlemen, I want to thank you for joining me today and giving us some insights into your war stories from the floor. We kept it PG, so for everybody out there, should be pretty happy with that. We had Bob Dunn, Bill Henner on the program. Bob, as a signature series, does classes in Online Trading Academy. Bill Henner, you find him in the XLTs and doing classes as well. So if you guys want to know more information, you can contact your local centers. So, gentlemen, thank you so much for joining us. I really do appreciate it.
Now,
thanks, Merlin.
Merlin, you got to have another show where it's not totally PG because we got some pretty good stories.
We'll have to do it on a different channel.
Okay.
I'll wrap up by saying this to everybody that's watching right now. I think the important piece here is this: markets are always going to be evolving. And if you look at the success that not only Bill and Bob have achieved, but also what they saw on those trading floors, it all revolves around kind of two main things, what I gleaned from it, which was rules, having rules and structure, discipline, meaning you followed those rules and you had a strategy in place. And number 3, you kept your emotions in check. The people who lost their cool generally lost a lot more money than they were intending to do because they just lost their cool. And I think we can all relate to that as individual traders. I know I can. I've done it many, many times where I've just lost it, and all of a sudden my losses just get way out of hand, and you suffer through those, but you learn from them. So hopefully you enjoyed that. I hope you got some information out there, a little bit of history from the trading floors, and just that odd piece of time that we won't get to see again. But the good news is markets will evolve, and we'll continue to try to capitalize on those. Thank you guys for joining us. We'll see you next time. I think the next webinar is going to be on Click, the evolution of a trading platform, with Todd Davis and Mark Greco. That will be next week. I'll talk to you guys next time. Take care.
Thank you, Merlin.
Bye, Merlin.